All right, guys. Well, hello and welcome. We're going to go ahead and kick things off. It is 11 o'clock on the hour Pacific Standard Time. So thank you guys all for joining this monthly edition of our broker webinar for you guys. We are happy to have you guys here and joining us today. I see a chat box. Oh, hello, Doug. How you doing out there? All right, but thank you guys again for joining us here for our October monthly broker webinar on our MaxONE product. We're super excited that you can take the time to spend with us here today so that we can review the information here with you. Again, we want to remind you guys that we want to be that one lender for you. We want us to be the one that you guys call for everything. So, of course, we have all of our non-QM stuff that we've been talking about a lot lately, but we do also, of course, have plenty of programs and options for our agency, FHA, VA, and our MaxONE borrowers that we're going to be talking about today. So thank you again so much for being here. My name is Jenny Beck. I'm the Director of Learning and Development here at LoanStream, and we're super excited to have our guest here with us today, Chris Wilson, who is our VP of Prime Underwriting. He's going to be going through the presentation on the MaxONE overview and give you guys some highlights on those guidelines. And then I'm going to review for you guys some important things that you need to know on how to price and how to submit these MaxONE loans. And then we'll open it up for questions at the end. So do take advantage of the time that we have here with Chris today, because he is our subject matter expert and he'll be able to answer those questions that you guys have. We certainly want to be able to help you help more borrowers by utilizing this MaxONE program. So without any further ado, I'm going to turn it over to you, Chris, and you can go ahead and roll through the borrower eligibility and the product highlights.
Sounds good. Thank you, Jenny. Well, hello, everybody. Again, my name is Chris Wilson. I'm the VP of Underwriting on the Prime side. That includes conventional FHA, VA, and USDA, and I'm happy to be here and excited to present our MaxONE product to you. So what I'd like to do is just kind of go through, as Jenny mentioned, the highlights, and then if we have time, we can go through the matrix. I'm happy. I'm very interactive. I like to kind of, do the whole Q&A thing. I think that works best. Also, I have a loan that I can kind of show the data input, how to input the second into for the subordination. So therefore, it kind of covers for the CLTV and then also reflects as the asset needed to cover the shortage. So really, we follow 95% of our standard FHA guidelines. There's really not a lot of nuances to the guidelines. So really, refer to our FHA standard matrix and the 4000.1. We really don't have too many variances from that. With that said, we do have a few that I just want to go through. So again, the max that we allow on our DPA is 3.5% of the sales price or the appraised value. It doesn't mean that the borrower can't put down more, but that second can only be 3.5%. The proceeds, again, may be used for the down payment or the closing costs. The borrower cannot receive any cash back from the DPA proceeds. It doesn't mean that they can't get any cash back. Like if they, let's say if for some reason it's a no-cost loan, the rate covers all closing costs, whatever it may be, and they put down an EMD, they can get that EMD back as long as it didn't come from the proceeds of the second, the DPA. I hope that makes sense. The maximum loan amounts are per FHA guidelines for the county of the subject. The maximum LTV is 96.5, and then combined with the 3.5% DPA with 100% max CLTV. Again, the first is a 30-year fixed, fully amortized, and the second is at 0%. Now, I do want to clarify the second, it says it's fully amortized, right? So you would think, well, wait, are they making a principal payment? There is no payment whatsoever. They don't even make a principal payment. This is a zero payments DPA. It's fantastic product. I love it. We also do, not only do we do the 1-unit products, which includes your single family, HUD approved condos, PUDs. We also allow 2-unit properties. A couple other things that I do want to point out. We have some state restrictions. So in Arizona and South Carolina, the minimum amount on that DPA is $5,000. That is mentioned on our matrix, as well as we do not allow this DPA in the state of Washington. And lastly, this DPA is not allowed to be subordinated. Jenny, do you mind going to the next slide? Or how do I go to the next slide? Thank you very much. All right, to continue, again, the minimum FICO score is 580. We do not allow any manual underwrite, so it must have an approved eligible. There are no first-time home buyers restriction. However, we do require that at least one borrower complete a HUD-approved counseling and provide the certificate prior to docs. So before you can have docs released, the borrowers must complete the counseling. Non-occupant co-borrowers are allowed per FHA guidelines. There's no income restrictions, but however, the underwriters, they have to make a comment on their LTV if for some reason the income exceeds the average median income by 160%. That's why there's a little asterisk there. And then again, the DTI follows the AUS. There's no cap. As long as I have an approved eligible, I'm good to go. And as I mentioned, one of the borrowers must meet the counseling. So that's really it. It's this great product, no payment. It covers the down payment for the borrowers, and it's just a fantastic product. I honestly don't understand. Every FHA file should be done this way, in my opinion.
I have a question in the chat box, if you don't mind, Chris.
No, not at all.
The Max County loan amount is increasing. When will these changes come into an effect?
Well, FHA hasn't announced it yet, but we will be issuing the 2022 limits for Fannie, Freddie, VA, USDA shortly. We haven't yet, but when they do, we will send out an announcement, and then obviously we'll increase it at that point.
All right, lots of questions coming in. Is there a median income limit?
There isn't really. I mean, there's like a behind the scenes one, but as far as the borrower is concerned and you're concerned, no, there is not.
Okay, what is the minimum loan amount?
The minimum loan amount, there isn't one. There's just unless you're in the state of Arizona or South Carolina, and then it's $5,000. So it's just going to be 3.5%. Whatever that is what it is. Okay.
Is it offered for only FHA?
Yes.
All right. What is the source of the DPA assistance? Is it provided by LoanStream or government entity nonprofit?
It's a government entity nonprofit. It has to be, or it wouldn't meet FHA guidelines.
Do you have to hold the second for a minimum time frame like 3 years?
No.
Okay,
no, just that if they but if they do refinance, it has to be paid off.
Because it cannot be subordinated, no matter what.
No matter what.
Okay. Do we obtain outside approval like CHFA, or is that supposed to be CalHFA?
That's CalHFA. No, we don't. It's something that's done internally. So even when you upload the file, you only upload the first, and then our setup team creates the second for you. Then what we do is the underwriters will add a condition that's called reserving the funds, and that's done actually by our lock desk, and that's it. There's no additional step. There's no additional approval. We don't send the file to a second party to underwrite and approve. If the first is approved and the loan meets the DPA guidelines per our matrix, that's it.
Okay. Is there only DU, or can we run through LP as well?
Could be DU and LP.
All right, but we do need that approve eligible.
Yes.
Can we use rent from a second unit as qualifying income?
Yes, per FHA guidelines.
Okay. Where does DPA come from? We already addressed that. It's FHA. How are the rates on the first? We'll take a look at that in a minute. Do you mind sharing the name of the government entity that is providing the DPA?
That is proprietary.
I may have missed it. Is this DPA in the form of a forgivable grant or a second silent loan?
It is a second. It's not silent, meaning it's never forgiven. It will eventually have to be paid off, but there are no payments. So if they sell the property, it will be paid off in full, or if they refinance the property, it will need to be paid off in full.
What about the expiration? I mean, the maturity of the loan?
It's a 30-year term.
Forgivable. Yeah. Okay. What is the max DTI? That's going to be per DU findings, correct? So are you approving as usual without DPA?
I'm not understanding that one.
I'm not. How do we calculate PITI payment to get an accurate PITI?
There is no There is no payment
No
on the
payment.
second. There's no principal, there's no interest. It is flat out zero.
Is the cost of this buried in the price?
I would believe so, yes.
Yep, I'll show you some pricing in a minute. Is DPA included in the DPA and the DTI? You just answered that. No, because there is no payment. Does the DPA amortize out at any point?
No, no. I mean, again, when they refinance the property, it has to be paid off, or when they sell the property, it has to be paid off.
All right, you mentioned there are very few overlays. Can we look at that? Anything we should look out for? We will show you the matrix here in a second. And when you are doing the approval, do you include the DPA?
Yes. Yeah, we will send out an approval on the first and the second, and the CLTV will be reflected in both.
Okay. Are there any fees associated to the second other than the recording fee?
There is a fee, I believe. I don't know if I know it off the top of my head. I'm looking at the matrix to see. I don't see a fee on the second, so there may not be.
Okay,
I
3
don't know.
units. No, we can only do
Correct.
up
3
1 or
units
2.
are not eligible, correct?
If it's just a second that has to be paid off when the house is sold or refied,
Well, and the
The
existing
first.
first, yeah.
right? Whatever your transaction is.
Correct.
What are the minimum reserves and are gifts available?
No minimum reserves. It's just per the AUS, and then gifts are available per FHA guidelines.
Okay, how can the borrower get the full 3.5% DPA?
By just
Applying.
it's
That's
an
what they get,
automatic,
yeah.
right? Just by applying.
They can't get more than that, basically.
Correct. It's never more than the 3.5% of the sales price or value, whichever's less.
Are manufactured homes allowed?
Yes.
Can you please revisit the income limit requirement?
Well, there really isn't one, right? It's an internal. That's why I put an asterisk to it. So in all truth, there is one, but we always get the exception. So there's really never going to be an income restriction for this product. The underwriters just have to make a note when it's over 160% of the AMI on the LT, but that's it. There's no, I mean, if your borrower makes 120,000, 150,000 a year, they qualify.
Cool. All right. Are ARMs available with this?
No, ma'am, it's a 30-year fixed.
Okay. Is this for the down payment only, correct? Or will this help with closing costs?
It can be for the down payment and closing cost.
Okay. I think those are all the questions. Blended score work.
Blended score, that is a Fannie Mae product that is automatically ran through the DU, but we don't allow scores on conventional below 620.
Okay. I'm going to release control and you can show them the couple of things that you want to show them,
Okay.
the matrix and what it looks like. And then I'm going to answer a couple more of these questions that have came through. Somebody asked about flyers. I'll show you our marketing stuff and how to price, and then we'll come back and answer a couple more of these questions. So let me release control for you. I'm going to stop share. Whoops, here. I'm going to go stop share, and then you can go ahead and share.
All right. So I want to share screen, and I want to share screen 1. All right. Can everybody see my screen?
Yes.
All right. All right. So this is our DPA second matrix. So I'll just kind of go through it again. It's for primary residences only. Again, non-occupant co-borrowers are allowed per HUD guidelines. We don't have any first-time home buyer requirement outside of counseling is always required. No cash back, no minimum contribution. Borrower can't receive any cash back from the DPA. Here it talks about what what we allow the DPA to be used for. Now, I'm not going to go through each one. See, oh, right here, fees and compensation is NA. So to answer the question, no, there is no fee associated to that. All right, again, it's a 30-year fixed. Oh, that is very important. It is a conforming balance product only. So the high balance areas like Orange County, the high ceiling amounts, it would not apply. This would not be eligible. Again, it's a 96.5% LTV and 100% CLTV. And I do want to reiterate that, right? Conforming balance is only on the loan amount. And I apologize for not bringing that up earlier. Again, counseling is required. There's a link on the matrix that you can cut and paste, and it'll take you to a link and give you your borrower some offerings for that. Ineligible features, again, construction to perm, build on your own land, easements and deed restrictions that impact the value, resale deed restrictions. New construction is eligible, but it has to be completed at the time of purchase. So in other words, no holdbacks. We do require transcripts, but only when we're self-employed borrowers or using rental income on an existing property. Purchase only, so it can't be used for a rate and term. MI is just your standard coverage. And again, the first is a 30-year fixed only, and the second is a 30-year fixed at 0%. And then here's the restrictions that we mentioned. The Arizona and South Carolina, again, minimum loan amounts are $5,000. And so if the 3.5% is less than $5,000, then you would not be able to use this product in those two states. And then it's not eligible in Washington. And again, here's the first, right? So the MaxONE first is basically our standard FHA. And it's just, this matrix is on our website. And so I just kind of wanted to point that out. The last thing that I want to show is, let's see if I can figure out how to new share, screen 2. All right. So this is can everybody see a loan in my screen?
Not yet.
Oh, it's hit share.
There we go.
Good. All right. So I just wanted to show the data entry for Encompass. So this is on the 1003 ERLA lender screen. I don't know what the brokers have access to and to view, but like for any sales folks on the call to kind of show them how to do it. You just go down to the subordinate financing. You click. You're going to hit this view all additional loans. Choose it for the borrowers. You're going to put OMC VC, which is us. It's important to put it as a mortgage and not a HELOC. Lien position is always second. Then you put the amount in there, and then you just hit close. Then what it'll do on page 4 under other assets, it'll show here. Okay, so that way it'll be applied towards the down payment and closing costs. And that's really all I had to show. I'm happy to answer any questions on this product.
There's still a lot of questions that have came through, but I'm going to kind of pick it up from here, and I'm going to show them a couple of things in the lounge, and I'm going to show them how they would price, and then we'll go back to answer some of these questions. So please hang tight, guys, because we will get to the rest of the questions that keep coming through, but I want to share with you a couple of more things before we get back to it. So let me go back. I'm going to take over again.
Thanks, Jenny.
And I'm going to share with you guys now in the lounge. Okay, so here in the quick pricer, guys, I want to show you when you go in here to do pricing in the lounge, what it's going to look like. You're going to price it out as an FHA. First of all, when you log in, this is where you're logged in. You're going to go to your pricing tab here, and you're going to choose FHA as your product because it is an FHA product, and you're going to price out your scenario. Of course, it's going to be a purchase. You're going to need to plug in your FICO, plug in DU approve eligible. Any of the red required fields need to be filled out. So in this particular scenario, we're doing a $400,000 purchase price. It's plopped all the information in here for me. I'm going to just hit get pricing because I want to show you how your pricing will display just so that you're aware when you go in here and do pricing in the lounge. The first thing that you're going to see is FHA 30-year fixed. But when you scroll down a little here, you're going to see your MaxONE 30-year fixed options. Okay, so somebody asked the question, how is this pricing out? Here's your pricing, okay, for a MaxONE. Okay, so when you do price it out in the lounge, this is just your template to price. When you go to submit, same thing, you're going to run your pricing. You're going to select whatever it is that you're choosing, and you're going to hit continue to choose your pricing. Okay. Somebody had asked, where do I find marketing information on this? Do you have anything available? So there's a couple of things that I'll show you here on our website. Under resources and marketing, we have a ton of marketing information or material here available for you. Under broker customizable, you can go in here. It's taking a minute for some reason, but there should be a list of things here. You'd have LoanStream flyers, AE customizable, and broker customizable. They're all going to be the same flyer, but these here you can customize and plug in your information, your broker shop, your loan officer, everything can be customizable for you here. And there is a MaxONE flyer in here. I'm not sure why it's not showing. I'm going to go back into it, but it is there. So let me try this again. It must just be a delay, but they're there for you. So we do have the marketing material there for you. Another quick reminder, just while I'm here, I'll show you here under programs, you can go to MaxONE where you can find more information, the matrix that we just shared with you as well. And then here under webinars, if you go to webinars, you'll be able to find a recording of today's webinars and any of our other past webinars. And you can also click in there to request additional training if you'd like. So I just wanted to share that with you while I had it up. All right, back to the pricer and how we price, recap on the pricing, make sure that you're scrolling down to select your MaxONE pricing here. And then what I also want to mention, guys, is there were a couple other bullets here that we had in closing. Let me make sure I hit everything. It is now supported in the lounge. So these submissions were going in through TPO Connect only, but they are now supported in the lounge. So we do encourage you to submit it in the lounge. Again, the pricing is available there in the lounge in the quick pricer, but it is also available on our daily rate sheets. You would submit this as you would any other file. Intake will create that second for you, and they're going to disclose on it. We're going to do that for you for the second. So you're just going to submit like you would any other file for your first. So when pricing, again, I just wanted to make sure to mention again that FHA option is going to display first, and you'll scroll down to choose your MaxONE. I'm going to go back and see what questions we have and kind of pick it up from there because I know we had a lot that came through. So let me take a look. Thank you for having this. You're welcome. I have a 3-unit, 2 are residential, and 1 is a commercial in New Jersey.
That would not be eligible because it's a 3-unit property. At
Right.
least not under the DPA.
Right.
It may be eligible for FHA depending on how small or big the 3rd unit, commercial unit is, and if it meets mixed use guidelines.
All right. And is this similar to Chenoa or is it Chenoa?
It is not Chenoa, and it's kind of similar to the but it's not Chenoa. And again, I can't address who the product is run through. That's proprietary.
Is it only for W-2 borrowers or self-employed as well?
For all eligible borrowers per FHA guidelines.
Awesome. Is this only lender paid comp, or what is the comp for it?
That I don't know the answer to, but we don't have any fees or compensation for the matrix. So
yeah, you can go lender paid comp, or you can go borrower paid as well, of course.
Yeah.
But you can do lender paid comp, and whatever you're already approved for would be your lender paid comp. All right, for approvals and submission, 1003 should be for the first lien only, correct?
Correct.
I couldn't get into the marketing material yesterday as well, so maybe there's an issue. Perhaps. I just thought maybe it was slowness on my end, but you should be able to find them there. I'll double check. All right, is LO compensation factored in the pricing, or do we have to add that to cost for the customer?
Jenny, can you repeat that question?
Mm-hmm. Is the LO compensation factored in the pricing, or do we have to add that to the cost for the customer?
If it turns out to be a bona fide discount points, then it would be something that would have to be added into the cost.
Okay.
I mean,
3.5% automatically, whatever you want to apply to works for both.
Well, the maximum is 3.5%. You most certainly don't have to use the maximum if the borrowers want to put in some of their own money. But 3.5 is the maximum it can be.
What does OCMBC stand for?
That is a great question. That's a trick question.
Orange County Mortgage Brokers Corporation or something like that.
Yeah.
Originally, Robbie owned Orange County Mortgage Broker. It's his company, and so he's just kept that company name. And so we're a DB. We're a subset of that. Orange County Mortgage Broker Company, or something like that. I'm close. All right. Mortgage broker. Okay, will we get a copy of this training? Yes, this will be available on our website where I had just pointed to a second ago under webinars. You'll be able to access a recording of this. And it's usually posted, give it a day for it to get posted there. He mentioned it will also help with closing costs. How so and how much?
Well, let's say the borrower wants to put in some of their own money. So it's kind of a blend, but really it's 3.5% regardless. So whether the borrower's money is used for, it's kind of semantics. If you want the borrower's money to be only for closing costs, and then the 3.5% is the down. If you want the borrower's money to be 1.5% of the down payment, and then the 1.5 towards the closing costs. Again, the DPA is just 3.5% of the sales price or value, whichever's less. And then the remaining funds from closing costs down payment must come from the borrower's own funds or gifts. It's kind of semantics.
What is a realistic time frame to close a DPA to advise our partners on a close of escrow time frame? 30, 45 days? What?
It is the same realistic time frame as it would be to close the first. So it depends. We are running 24 to 48 hours on initial decision and condition reviews. So as long as the conditions are provided timely, and we can close as quickly as you want us to. Because again, the second is done in-house. There's no outside company looking at it before we close.
Can we increase the rate and use the discount to cover closing costs while using the DPA for down payment?
Yes, you can, just like you can on a standard FHA.
I noticed the rate sheet are all below par. Are you having an issue with QM?
Well, the second would not, it does not fall under QM. Well, the second doesn't fall under QM. So. Okay,
gotcha. Okay. Are there 6% seller concessions as a regular FHA?
Yes. So it's a standard FHA as far as seller concessions and IPCs.
All right. How much do we have to pay back, and is there any interest? We've answered that.
Just to reiterate it again. So the loan will need to be fully paid back when either they sell the property or to refinance it, but there is no monthly payment at all. Okay.
What home buyer education is eligible?
Any HUD approved. There's a link within the matrix that you guys can cut and paste, and then the borrowers can choose whichever one is the most convenient for them.
All right, I caught up on everything. All right, here comes another. All right, but on the first, the rate sheet is below par, so that means there's a cost to get the rate. That's why I asked about the QM, since there can also be so much cost in a lender paid situation.
Unfortunately, I can't speak to the rate sheet and the pricing for that. I would reach out to your account executive for that question.
Right.
But any costs obviously would be applied towards the closing cost. Any fees on the first would apply towards QM and the 3%.
Again, is this a silent second?
It is not silent, because silence usually means forgivable. It is a zero payment second that will eventually need to be paid off in full.
Will the loan prorate after years for repayment?
Say that again?
Will the loan prorate after years for repayment?
No, it's just whatever it was at the beginning. If it's $5,000 today, in 30 years, it'll be $5,000.
Can the DPAs get depleted?
I'm not sure I understand that, but I'm going to go with no, because if you owe the money today, you're going to owe the money in 30 years.
the fund. So maybe
Oh, will they
yeah.
stop? It's not like USDA or any other DPA where like once they run out of money, the program stops temporarily. No, it's not like that. So no is the answer to that.
What is the max allowed comp? I think it's going to be tied to what your comp plan is, but I think I saw a bullet point that it was 2 point, there might be a max underpaid on the matrix, but it's like 2.5 or might be 275, whatever our max comp is allowed, I think. We could double check that. Any other questions, guys? I think we're good on the question box and the chat box. Sorry, I was late. Hold on. Answer this, but what is the max DTI? DTI is going to follow your AUS findings.
Correct.
All right. Thank you. Hi, Chris. I'm getting a shout out from someone.
Hello.
Can you review again where to find the flyers? Sure, we can take another look and see. Is a gift allowed?
A gift is allowed and there's no max. It's just basically, whatever HUD allows. And also, on those closing cost credit, I just do want to make sure everybody knows whatever the max percentage is, it can't exceed the actual closing costs and prepaids after credits.
Am I still sharing my screen right? Okay. I'm trying to check on the flyers again because someone said, can you try to get to the flyers again? They should be here. I don't know why they're not, but they should be here. And there's a ton of flyers here too, not just the Max one. There's a ton of stuff that you guys are welcome to use.
Hey, Jenny, while you're looking for that, there's another question. Is repayment for a streamline refi 2? On a streamline refinance, this product does not work with the streamline because it's for purchases only, but a streamline is a fully amortized payment. It's just there's no DTI. It's audio.
All right. Well, I think we've answered everyone here. I just want to do one quick glance over, make sure one more. I see one more. The question was if they want to streamline after purchasing.
Oh, they would not be able to because if you go to do any type of refinance, you'd have to pay off that second. That's a great question. But they could bring in their own funds if they'd like to pay it off and streamline the first.
I'm sorry. Can you show one more time how to input the DPA when uploading the file?
Yes.
Is that for Encompass? Yes. So let me release I'll stop sharing. And then I saw something else come, and that was, let me see, where's my, can we do a TBD address? No, we cannot do TBDs.
Okay. Can everybody see my screen?
Yes.
Okay.
Any idea when FHA will be reducing their MI rate from 0.85% down to 0.6%?
No, not that I'm aware of.
Let me ask my magic ball. I wish.
All right, so I'm on the 1003 IRLA lender page, and then I scroll down to where it says mortgage lien type. I click on the little link here for subordinate financing. I'm going to go to where it says view all additional loans. Then I'm going to enter my data. And again, it's very important that you choose mortgage versus HELOC. This is the first right here. Say I need to choose the second for lien position. Well, actually, I think I'm in the second. So this was just confusing. Sorry, I opened up the wrong loan. I'd closed out. But this one is, they would choose second position, then they would put in the amount, and then they would put in the full amount, and then they would hit close. And even this, right? Because this is the second TD. And then when I go to the asset section, right, you can see up here, right, where it has the LTV on the second is 3.5, and then the CLTV is 100%. Because here, the first shows here under 4B for the additional assets. That way it's also applied towards for the down payment and closing costs. Hopefully that helps.
I'm sure it does. Thank you so much. All
You're
right, I
welcome.
have another question. Can a new first-time buyer moving to California for a new job qualify for this program?
They would be able to, as long as they go to home buyers counseling and they meet all FHA guidelines for new jobs, new employment.
Very cool. All right. Well, I think that might do it for the questions in the chat.
Excellent.
Any last minutes, guys? All right. Well, I'm going to just kind of close it out with this on our website here, guys. Again, remember, take a look here and you can find all of our programs. Our current rate sheets and our turn times are posted here.
I think
If
I'm
you're
still sharing, Jenny.
Oh, then let me go ahead and close this out one more time. Can you see my screen now?
Yes.
All right, cool. So again, guys, we'll close this out on our website programs. Take a look at all of our programs here, including our MaxONE. You'll be able to click on them here and find out more information. Here's our current rate sheets and our current turn time. So take a quick glance there. Our resources, again, here you will find our marketing flyers and a copy of the recording from today down here under webinars. And then if you're not already approved with us, we do encourage you to get signed up by going here and getting approved. We would appreciate your partnership. So thank you guys all for joining. I'm going to take one quick last check at the questions. Nope. Great. Thanks. Great info. If there's anything else from here, guys, please reach out to your account executives. They have a lot more information that they'll be able to help you out with as well. We thank you guys for joining today and appreciate your partnership. Thanks so much.
Thank you.
Bye-bye. Bye. Thanks, Chris. Thanks so much, Chris, for being here with us today as well. We appreciate it.
It's my pleasure.
All
Bye,
right.
everyone. Have a great rest of your day.
Bye-bye. Thanks for joining, everyone. Bye-bye.